Welcome back, everybody out there in Think Tank land. Brian here, one half of the Think Tank guys, and today I have another episode where we're going to talk to you about how valuable this cash account is, the cash value account inside your whole life policy. One of the 52 reasons we're looking at, is that it will in fact help you reduce or eliminate your term insurance costs. So make sure you're checking us out, 52 Ways to Work Project, hashtag 52 Ways Project on Facebook and YouTube. But today, it's essentially, I'm going to kind of use this video as an extension of our last conversation I had with you, which showed you the return that we're seeing inside of these cash value accounts because of the guaranteed interest that's credited, and because of the dividends, and because it's not exposed to the market, and because we don't have to put up with the low interest rates at the bank. Remember, banks hold a lot of their capital in these accounts too, and they build it into these accounts not just as a safe place for cash to grow, but also as a place to build executive retirement benefits as a foundation for those retirement benefits. But along the way, as responsible individuals, whether we're making sure that we're covered in case we get hit by a bus for our debt load, whether we're making sure we're covered for the kids to go to college if we get hit by a bus, as responsible individuals, we know the role of life insurance. And we're often teased, our eyes go to this lower price tag of term insurance. And I have to do a little asterisk here. There's nothing inherently wrong with term insurance. As a matter of fact, most of us should have term insurance in some capacity. We need to make sure that our families are taken care of if we do in fact get hit by a bus. But there's some reasons as to why it's so low cost. Doesn't mean cheap, because you're going to notice today what I'm going to teach you, just because something's low cost doesn't mean it's cheap. There's reasons why it's low cost. And then secondly, we have to consider the fact that term insurance is a pure expense, whereas the whole life cash values are actually an asset. And I'm going to use numbers today to show you. And they're going to be an extension of the conversation I had about the cash value account being a terrific place for cash. So let's dive in here. Let's check this out. Your policy will reduce or eliminate term insurance costs. How's it going to do that? Well, let's take a look. I took the policy that I showed you in the prior episode where we talked about it being a terrific place for cash. That's this whole life down here. So this is actually whole life insurance down the bottom. Let me actually this is a whole life policy. Whoops, whole life policy. It's actually my policy from a few years ago. And this here will be a term policy. And I just want you to see some things. I'm going to make this. So in both cases, this is the best case. This is the best class health rating for each of these policies. So I also want you to see when we look at these numbers, they're not being doctored. It's not taking a good health and bad health. I'm not Jimmy rigging or anything. This is pure numbers. Up here, this is term insurance, and we're going to look at for this death benefit. Now, it's that death benefit because I'm matching it to this whole life down here. For that death benefit, the annual premium for this term insurance policy would be $711.98, $712 a year. Down here, we've scheduled to contribute $15,175, and that's at least one level where people can say, holy cow, look at the cost difference. Well, for clients and for people who have been watching this is definitely not a cost. I'm going to show you that in a few seconds. There's a reason why I'm pushing extra cash into this thing. But I also want you to see that this is the pure term cost, the pure term price, and this is a scheduled contribution to the whole life insurance policy. So at first glance, someone who doesn't understand what you understand, who doesn't have their ears open to what we're talking about here, will take a look at this and they'll say, okay, for an elite health 39-year-old, $468,000 death benefit for a 30-year term. It's going to be $712 a year or $60 a month. So the cost is low. The cost is what it is, and that's quote unquote cheap. Especially when I look at it right next to a whole life policy where, oh my goodness, Brian, you're talking about moving $15,000 in there. Well, yes, but at the same time, that $15,000 also, let's take a look at this, that $15,000 also has a cash value from day one that will grow to $10,705 by the end of the year. So that $15,000 is not the cost. Let's look at the cost. The cost in year one is the contribution minus what the cash value grows to for that said death benefit. So I'm going to show you right now the cost is $4,470. So side by side in 1 year, there is no question about it. Term insurance is quote unquote cheaper. But we're not holding term insurance for 1 year, and we're also not building our policy just for 1 year. So let's kind of break this down a little further. If we look at the term insurance and we're a little more analytical about it, that's $712 a year, which is going to continue for 30 years, is going to slowly but surely add up in its cost to where it actually, if we hold this thing all the way out through the 30 years, we're going to spend $21,360 in insurance premiums for that term insurance policy that's quote unquote cheap, and then have no insurance left 31 years in, because after 30 years, we're most likely going to be still healthy and we're going to give it up. We don't want to pay the increasing costs that happen outside of that. So now right next to that, we're going to watch what happens in the whole life policy. In the whole life policy, over time, I'm scheduling to push cash into this thing, cumulative contributions of $15,175 for a number of years, and then I taper it down, and then I taper it down some more. And actually, you're going to notice too, even in retirement, quote unquote retirement, after age 31, I'm still going to be pushing some money in because of, you're going to see in a second, how valuable this account can be. So the death benefits match up. But in year 1 and 2 and over the first couple years, you're going to notice there's a cost to the whole life insurance, quite frankly, because the life insurance company is on the hook for a death benefit for the rest of our lives. But what I want you to see is that as we experience that cost, when we get dollars in cash value, that money is actually going to start continuing to grow, like you saw it growing inside my policy in the last video that I recorded at 4.5%, 5%. That's going to help us overcome the cost, because look what starts happening to the cost over time. That cost is going to go down because we're squishing more money inside this policy and getting it to work for us early. Now, when we get that money in there to work for us early, what's going to end up happening is a few years down the road, and this happens before year 10, because you're going to notice this number here, well before year 10, but usually by just after year 5 into year 6 into year 7, we're going to see that we have as much cash or more than we've contributed to the policy. So our net cost is actually now a net gain. That's why this number goes from red to green. So you're going to notice within the first decade of this thing, rather than spending $7,120 in pure term costs, I actually have gains. of $19,350. Oh, and by the way, because of the way this thing's built, my death benefit is increased above the starting death benefit of $468. So this thing is not only a cash asset where we can use this, I think you guys know this by now, we can use this without interrupting its growth, and you're going to see the growth that's going to continue down here. We can use this without interrupting its growth, but it's an asset on the books here, and it's an asset to our family that's going to continue beyond year 31. Let me turn this. It's going to continue beyond year 31 because over here, there's no more death benefit. Over here, we have an asset that's worth over $1 million, that's worth over $300,000. I'm doing some math. Over $379,000. There it is, right there. $379,000 more than what we put into it, and $1 million to our family. So, if anything, I wanted you guys to see that over time, when we build these things right, and these things are scalable. I mean, clients of ours know. I have clients that have smaller policies than this, clients that have bigger policies than this. This is just one of my policies. So, like I was saying, you probably heard us say along the way, you can have multiple policies like this. You can build them on your grandkids. You can build them on your business partners. It's just so powerful what it can do. And one of the things that it does, in addition to all the other stuff we're talking about here on the 52 Ways Project, it will help you reduce or completely eliminate term insurance costs over time. So, think tankers, use that as your motivational analysis for the week. If you have any questions about this, you want to get one of these for yourself, or introduce a friend or family member, you let Eric or I know. In the meantime, stay prosperous.